All right, folks, we are back to start off December with a guest from Caleb and Brown, a platform that many of you already know and love. But for the new folks out here, we're happy to get you tapped in here with our good friend Jake Boyle from Caleb and Brown. Jake, how are you doing today?
Very good. Nice to see you again, Zach. How you doing?
Always a pleasure to connect with you guys. Are you across the pond right now in Australia tuning in for us?
Yeah, I'm in Melbourne, Australia. We actually just moved into a new office for our Melbourne HQ. It's two streets over, but a lot nicer. So if anyone's listening and you happen to be in Australia, we'd love to show the new office.
And what about this new office in the States that you guys just opened up? What about that one?
So we have an office in Fort Lauderdale, Florida. We're looking to open one in somewhere in California, and then Melbourne and Sydney are two of our hubs. And then our acquirer, SwiftX, has a major office HQ in Brisbane.
And last time I spoke with Jim, he was saying that it was business as usual. You guys had been acquired because really you were such a successful business with a big US client list. And so is that process still going over smooth? And can you elaborate on that deal?
Yeah, thanks for asking that because I get a lot of emails, calls, and text messages about the acquisition every day. Naturally, which makes sense, right? We're a crypto business, and then acquisitions in any industry are a big deal. So, SwiftX is the second largest cryptocurrency business in Australia, and they've effectively got such large saturation in New Zealand and Australia, the two markets that they service, that they're wanting to grow overseas. We've had a good business relationship with several years with their leadership team, their owners, co-founders, and of course their CEO. And as a result of that, we noticed that the businesses culturally were very aligned. We just service different segments of clients. So they're wanting to grow as a multinational company, as a billion-dollar group entity. So as a result of that, they said, well, hey, we would like to explore an acquisition with you guys on the basis that you guys can continue to do exactly what you currently do, but just with the backing of this billion-dollar parent company, which can actually give us the resources to grow and grow. So I almost feel like a spoiled child being able to have a big Christmas shopping list now because when we say to them, hey, we want an office in California, hey, we want to do events across America with clients, we want to hire more staff, we want to build these new products, we want to integrate with these platforms, they say, yep, that makes sense. I think you guys should do it and we'll back you in doing so. So it's been a really easy process so far, to be honest.
I love that because it reminds me of what we're watching take place with Ripple, right? Really, since 2022, a lot of the space, got liquidated, wiped out, and you see companies like Ripple, amidst all this chaos, they're still making billion-dollar acquisitions. And so, folks, I'll just make a quick note. During these volatile times when it's a little troublesome out there, finding companies that are still making acquisitions might be good investments and might be the partners that we want to continue working with. And so I am glad to hear that it's going smooth over there at Caleb and Brown and business as usual. And that's really the business and service that we've come to love. And so we'll talk about your guys' company and what you guys have been working on over there. But I want to go back. Speaking of volatility, let's go back to the 1010 liquidation event because it appears my analysis is, we're still going through some forced selling liquidations. I got a clip here from Tom Lee that I'm going to insert, but Tom Lee makes very shocking statements that one, he knows of the market maker that went bust. And then he followed up in another CNBC interview here saying that one third of the market makers on 1010 actually closed their doors.
But on October 10th, crypto had what I would call Armageddon, a flash event, but it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch.
Now, Tom Lee won't mention any names, but I know that you guys are in the business and you work with a lot of people, Jake. So maybe, do you know any market makers that aren't taking your phone calls anymore? What did you guys see on your end?
To elaborate on the back end of what happens when a trade gets processed through Caleb and Brown and how that differs to, say, just a normal exchange that you might use on your phone. If someone says they call their broker, that maybe it's me they're working with directly, they say, Jake, I want to sell $20,000 worth of US dollars, and I want to use that to purchase XRP at market price. Because during the 1010 liquidation, every cryptocurrency, whether you love it or whether you hate it, it's down in price. And there's nothing we can do about that. So people are naturally wanting to buy through us as they were through other platforms. What our backend looks like there is we will basically have a trading team which is plugged into effectively every single reputable avenue where any liquidity exists for hundreds of different cryptocurrencies, which means that any given trade could be executed using a trading desk in Hong Kong, in Singapore, in the United Kingdom, in the USA, maybe locally in Australia. We're not geographically limited in where we source out liquidity. So as a result of that, we did find on the 1010 liquidations, and even just the other day with a major sell-off yesterday as well, what we found was that there were a lot of platforms that were more reliable than usual, and some which we opted not to do any business with. And I'm not calling anyone out necessarily because a lot of these platforms offer different things, and they might be great for X, but not so great for Y. A lot of the big OTC desks that only work with institutions like ourselves, they were very reliable during that period. So we were able to get clients XRP, XLM, Bitcoin, Ethereum, Solana, whatever it is you're interested in, even the difficult altcoins. Whereas a lot of major retail exchanges, you couldn't actually log into during that same period of time. So I think this is a reoccurring issue. In terms of market makers and a lot of institutional players, I also heard a lot of rumor that there were people who got themselves in pretty spicy situations. I think the bigger issue there may have not so much been the intense volume of people wanting to trade, as much as it was the fact that I think a lot of cryptocurrency businesses are actually themselves too exposed to the market. And as a result of that, these liquidations can be impacting their financial standing a lot more than what users of their platform might actually think, which is concerning.
Yeah, and like I said, partnering up, working with companies that are still making acquisitions at this time, probably a good move. But then also companies that are able to ride out volatility like this because they're not over leveraged. We're not unwinding a bunch of DeFi and leverage that you guys had on your platform. And so some folks might say that it's boring, right? Because you're not offering 50x and 100x leverage and all this DeFi and all these loans. But you've also, I mean, we were sleeping peacefully. I know you guys were working around the clock there bright and early in the morning. But can you speak to just how, client assets are segregated? You're not messing around with all this over leverage, and your business just stays simple for folks who are looking to, invest in cryptocurrency.
Yeah, it's a really important question. We've always steered away from offering a lot of the complex products that are out there. And it's not a matter of licensing where we have an Australian financial services license in Australia. We're able to explore a lot of very complicated products. The main thing for us is you look at Hyperliquid, I'll take as an example. Excellent success story. One of the most profitable companies in the world, great CEO, great product. I don't trade perps myself. I've got enough things to stress about in my life. I don't need to add that with a 10x leverage on an XRP or Bitcoin, right? That being said, great product, but my God, some of the complexity that comes with having to actually provide the liquidity to take the opposite position of certain trades and have certain exposures as a company, the amount of maths, the amount of risk management that goes into that is significant. And there's no shortage of stories where major exchanges have had to carry significant losses by virtue of their exposure to the market in volatile positions. In fact, they've often had to take the exposure against the users of their platform, and then they've actually found themselves in very negative positions. As a company, we are a financial services business that services the cryptocurrency space. It does not impact our balance sheet whatsoever what the price of any given cryptocurrency asset is because we're so boring. The majority of our wealth is actually just in pretty unsexy fiat currencies, not even stable coins beyond just the purpose of liquidity. And that's the case with our acquirer as well. So for us, when the market is volatile, it doesn't impact our balance sheet, and our balance sheet does not retain any client assets on it. It's illegal for us as an Australian regulated company to A, rehypothecate our customer assets, meaning we're not getting a loan for the bank because, you, Zach, have got a bunch of XRP with us or anything like that. We're not legally able to do that. And in the event that we were to go bankrupt because we couldn't pay our bills and our landlord's knocking on the door and our staff are saying, hey, you're late on paying our wages, in the event that something horrible like that was to happen, legally, we are not able to have customer assets on our balance sheet. They're segregated from the operations of the business. So worst case, if we did have to close down Caleb and Brown, it would be done so in a fashion where we would simply just have to tell clients, hey, like you're going to have to give us a wallet address so we can send your coins out. We're going to need your bank details to send your fiat currency. Our bankruptcy is completely remote from the assets our clients have with us.
Yeah, and this is why I feel so comfortable just having XRP and other assets on your platform. And I'll just be transparent with the audience. Outside of my cold storage, I have the most amount of XRP with you guys versus, other exchanges that I use. But I've just come to really love, I feel so comfortable having that institutional grade custody for free. Bankruptcy remote protection, check. And when it does come time to trade, the business is just straightforward. It's transparent on the trading fees. And hopefully we can take some more profit later on if this bull run, turns into an extended cycle. There's no withdrawal limits and no withdrawal fees. And so this is what I've come to love with your service. But Jake, let's get back into macro here real quick. What we've seen here is the crypto space, and this is really how efficient we are over here in crypto. We ripped the band-aid off on 1010, and there's been some ripple effects that have carried on. We bottomed out 1121 this last month here, and we've kind of been chopping and consolidating here. But as far as wiping out all of the leverage, which is healthy, right? That was done very quickly on 1010 versus what I see in the stock market. And we'll get into the Japan carry trade starting to unwind, right? Part of this global margin call. It's like the leverage in the existing financial system, the existing TradFi, stock market, the derivatives, the Japan carry trade. It's taking so much longer to unwind all of those trades versus in the crypto space, we did it in a day. Really, we did it in like 2 hours. And then, it's carried on a little bit here, but can you speak to, kind of what we're up against right now as far as the crypto space is kind of cleaned up our mess and our over leverage, but we still have some broader headwinds working against us. Can you speak to that?
One of the unfortunate things with the crypto space is after a massive wipeout, you'll see the open interest on chain and all that leverage just comes back. So people get wiped out on 1010 and you'll think, oh, well, that's a lesson learned in that. A lot of retail investors are surely just going to spot purchase the coins that they want and they're not going to load up on leverage. Wrong. They load up on leverage again. There is certainly a
Guilty. I am guilty. Now, I only use 2.5x leverage, so low leverage, always have extra margin. But yes, I'm guilty. Continue, Jake. Sorry.
No, no, no. It's more so when people are loading up on 20x positions and the like that some platforms offer that it's at 20x, it's just gambling unless you've got some information no one else has. But look, the cryptocurrency asset class is nascent, it's risky, it's grouped in as one of the more volatile, kind of on the cuff, on the fringe asset classes out there. Investing in any cryptocurrency versus investing in like gold, for example, or treasury bonds, love it or hate it, there's going to be that clear distinction. And as a result of that, people tend to sell off their cryptocurrency before they sell their family home or tap into their 401k or their superannuation in Australia. It's human nature to sell off the risky liquid asset before you touch the family home. So that paired with the fact that there is so much leverage used in the cryptocurrency space means that whilst we get these big sell-offs, we also get that leverage right back in the market. Whereas in some broader, larger market cap asset classes, we're not necessarily going to see a 15% decline in an hour like we see in an altcoin, which we might see in a, S&P 500 stock, for example. But look, that being said, I do think that cryptocurrency today is more dependent on these larger macro indicators than ever. So you mentioned like the yen carry trade, for example, and the fact that a lot of institutions would leverage the fact that Japan had such low interest rates to be able to gain access to more capital to then invest with. Now, with the interest rates increasing in Japan, that opportunity is going to cease to exist, and thus there is going to be less capital for those institutions to invest with if they can no longer get those favorable interest rate conditions. Now, that has a carried on effect to the cryptocurrency space because, as we know, with ETFs and greater institutional adoption of cryptocurrencies, those variables will now impact how many people have the liquidity to buy Bitcoin, Ethereum, XRP, Cardano, Solana, whatever the case may be. And that then has a flow-on effect to our ability to kind of really enjoy this bull market.
Yeah. Yeah. And we want to enjoy the bull market. But like you said, all of these external markets and factors playing out right now, I like to remind folks that they don't change the fundamentals on our crypto assets that are going to be part of the new financial system that are still solid investments, right? I make the joke, just because your girlfriend gets mad at you, don't take it out on XRP. You know what I'm saying? Some of these guys, I swear, they're having a bad day, you know, and then they want to take it out on XRP, and it's like, man, the fundamentals didn't change, right? And in fact, we continue to see them getting better. And so, speaking to this access, we have a meme right here in real time playing out before us where Vanguard, this is an $11 trillion asset manager on Wall Street. Their CEO said that they will not offer spot Bitcoin ETFs to their clients because it does not belong in a long term portfolio and it's not a store of value. Well, just here today, they announced that they will be allowing clients to buy crypto ETFs starting tomorrow. So, a complete 180 pivot from Vanguard. And they're going to be bringing a lot of access here. Like I said, they have 11 trillion assets under management. And so let's speak to this because we got these headwinds and there is some stuff to sort out over there, but the fundamentals continue to get better and stronger on a daily basis with more access. So can we speak? I mean, the ETF for XRP, the Canary one, broke the record for 2025 day one volume. And so clearly there is folks that want exposure here through these products. And this has just opened up and really started off. We got what, 5 ETFs now live, if you include the Rex Osprey, with additional leveraged ETFs going live as well. So what's your take just on this shift that we've seen from Wall Street saying it doesn't belong in a portfolio at all to, I guess we need to make some money off of this. Let's sell it to our clients.
It's comical, and I relate to it so much because early days of Caleb and Brown, XRP was in a couple of cents. Bitcoin was maybe 1,000, even not even US dollars, Australian dollars at best in our early days, just as CMB was starting to get started. So we went through all those periods where you go to a family dinner and you say, "Oh, I think Bitcoin's a good buy at $1,000," and people think you're an idiot. Fortunately, my family didn't, but I know that was quite common. And we've seen it with institutions too. I remember going to the Stockbrokers and Financial Advisors Conference. My memory might not be correcting me there. I remember going to this conference in Melbourne, Australia, and I had my little Caleb Brown business card, early 20s, really excited to give it out. And all these people had zero interest in talking to us. And then the same people are the people who are now sending messages on LinkedIn saying, "Hey, it'd be great to get a coffee. I heard about your acquisition. I heard about this. I saw this article." And I'm not calling them out for it because the industry has evolved and matured since then. So I rationalize why they're now interested. But it's so curious to see when there isn't price performance, people assume that technology is not valuable. And they need to rationalize that something is valuable when all their peers have purchased it, making it more expensive, and then they say this is great. And you see this all the time with every industry. What I've seen a lot recently is a lot of our staff, for example, in our operations team, they were in Singapore in the Ripple, one of the Ripple offices in Singapore. Insane office, by the way. And we're actually looking to integrate a lot of Ripple products into our services too, namely with things like fiat currency settlements and the like there. And that's really exciting because you're actually utilizing the technology and you're a part of the ecosystem. The token comes at the very end. So if you learn more about the foundational technology and use these things and learn about these things, the price volatility becomes less important. But if all you care about is what's Twitter saying about price volatility, you're going to be the person who buys the top and then sells the bottom. You're going to be the person who doesn't want to talk about crypto at the financial services conference, but then you do want to talk about Bitcoin when it's 110,000 US dollars.
Now, did we just get breaking news? Did you just share the scoop with us on a Ripple partnership, Jake? Is that what I heard?
We look, I think that the word partnership, we're a very modest business, so I don't want to be throwing the word partnership to try and latch on to such a more
Okay.
significantly larger company. I'm
Okay.
not going to try and do a PR stunt there, but what I will say is we have been exploring for some time the integration of a lot of the products that Ripple offers. Not just the products that they already have in terms of settlement, but also exploring a lot of their offerings outside of that. We have a lot of very talented staff behind the scenes who have been able to. I've actually met with a lot of people from the Ripple team. They come to our previous office around the road just a few months ago. Very talented people there, very nice, easygoing people there who understand the industry and the problems that need to be solved. And we're actually really excited to have some more material announcements in the coming months. But what we're most excited about is that if their services and products, like all the other partners that we have around the world that we work with, if they can allow us to offer a better service to customers so you can get your fiat currency faster, we can execute trades with better pricing, that's ultimately what we want. And the fact that it's Ripple and the fact that XRP falls into that is really the cherry on top of a lot of people in your community listening, I'm sure.
Okay, well, I won't put new Ripple partner in the title of the video, and I won't make my O face. That could have been some good clickbait. And in the last 10 minutes here, I'm going to need you to give me something juicy, Jake. Okay, so if it can't be a Ripple partnership, we might need a big XRP prediction from you or something like that. But no, I was at Ripple Swell conference beginning of November there in New York City, and it was just a bankers conference. You know, like you said, it's so funny to have those stories of you going and nobody wanted to talk to you. And now Ripple's hosting a conference that didn't even feel like a crypto conference at all. It was all bankers. It was just banks and institutions, payment service providers, you know, and the big holdup in the feedback that I'm getting from them right now is yes, XRP has clarity. We know it's not a security. That's great. But even though they know XRP is not a security, it allows them to sell the ETFs for it. But we're not going to see institutional adoption at scale using this technology till they get the rules of the road. And that's what was interesting about the Swell conference is you had all these institutions and banks in the room who were explaining how they were going to utilize the XRP ledger, how they were partnered up with Ripple, what they were exploring in DLT technology. But the consensus was we can't move until we get the Clarity Act or whatever the market structure bill ends up being here in the United States of America. So, how frustrating is it for you as somebody who's not in America? I know it's frustrating for us here in the homeland, but being an outsider looking in, are you as frustrated with DC in our Congress as we are?
Yeah, I think that one of the I lived in London and I still do live between London and Melbourne, Australia. And one of the things that really has just killed London for me so much is a lack of productivity because of the curse of a hyper bureaucratic environment. You create so many laws, you eventually have more laws than you do businesses. You've got more politicians than you do entrepreneurs. And in a time where you have access to the internet and the mobility of travel is so much easier now than it's ever been, the reality is that the talent moves. And using London as an example, so many of the entrepreneurs that I met and became close friends with in the crypto space in London, they're now in Portugal, they're now in Switzerland, they're now in Dubai, they're in Monaco, they're in Cayman, they're in all these places because they were just disempowered there. And taking it back to the big picture of, the United States and DC, look, we have an administration now which is pro crypto that we're all very grateful for. Are we at the point where we can actually embrace new technology and America can be categorically the leader in this industry? You guys are the leader. You are winning the race. But my God, there is still so much unnecessary red tape, which is preventing that explosive growth that can really change people's lives. But I'm optimistic we will get there.
Yeah, and it's looking like we're on track for Q1 of 2026 for the Clarity Act. And I've been explaining this to the XRP community, which is my audience, mostly focused on XRP. But this goes for crypto broadly speaking as well too. The SEC versus Ripple case that drug on till August of this year when they finally dropped the appeals on both sides. So that cloud was hanging over top of us till August, and then right when we're supposed to get our ETFs after that, the government shuts down, right? And so with the case taking till August, the ETFs for XRP not going live till November, and the Clarity Act still not passed and not on track to pass by the end of this year. I mean, you add this up, it makes sense why at least XRP, right, has kind of stalled out, and I would say the broader space as a whole too. But does it mean that we're not still heading down that path? No, we absolutely are. And I think that it's a matter of folks zooming out, remembering the fundamentals, not being distracted by the short-term price volatility, and taking advantage of these opportunities to, acquire the assets that we still believe in. I think that it's healthy that we wiped out a lot of the leverage in the space. I think it's healthy that we don't have, a million meme coins. I like a nice meme once in a while, but do we need a million, right? And so I think
Agree.
that the market is maturing. We might have gotten. What's your take on how this cycle has kind of finished out? It's like, to me, we got a little ahead of ourselves, thinking that it was going to be the same cycle top. We'd all be able to time it. We'd all get an alt season, and it's like the market makers kind of pulled out the rug from us here, and you can make your different excuses for why that happened on 1010, but we're feeling the effects of it, and definitely a lot of folks still holding bags that they were looking to get rid of by now. And so, what's your take on how this cycle's wrapping up?
Yeah, I think I used to really subscribe to the idea of a 4 year cycle following the Bitcoin halving events. I think that the supply and demand of Bitcoin per its halving cycle every 4 years is less material now than it's ever been, namely because of the institutional adoption and the amount of sophisticated financial products that surround Bitcoin, and thus make it less tied purely to the supply and demand mechanics of new coins being minted. Um, Even the way that miners work now versus how they worked 2 cycles ago is very different, because miners can hedge the price of Bitcoin. There's options, there's perps, there's so many things available to engage in this ecosystem with. The maturity of cryptocurrency, not just Bitcoin, but the whole sector, has increased. The institutional adoption and the access to ETFs, for example, has increased. As a result of that, I think that cryptocurrency has moved away from being dependent on this, big leader Bitcoin's halving cycle, and it's actually become more tied just to global liquidity. So I think that we're not going to experience another 4 year cycle to the dot, completely predictable like every other cycle in the past. I do think it can extend into 2026. I also note that the fear and greed index hits maximum fear time and time again, like earlier on when the market dumped, 1010 when the market dumped, it hits maximum fear. Typically, in previous cycle tops, you still have greed throughout those periods. I think that right now we do have more to offer in this cycle. Are we going to get ballistic altcoin prices that are just silly, like 2021, where, tokens that do nothing are just worth $3 billion? I don't think we're going to get that, but I do think that the majors have new all-time highs to be set. And I think with falling interest rates in the US, was ideally coming to an end around the world, and better geopolitical conditions, better working relationships between China and the US, which we've had some optimistic news on recently too. And ideally, this AI bubble narrative being disproved, I do think that 2026 can bring more liquidity into risk-on assets and nascent assets such as crypto. And we can see those new highs before we ultimately get humbled once again.
Yeah, right. The market has a way of doing that, doesn't it? And, I'm looking at a post here on The Economist magazine. And it came out here today, and it's Larry Fink and Rob Goldstein discussing how tokenization can modernize market infrastructure, enhancing efficiency, transparency, and access by connecting traditional and digital finance. And the reason why I mention it is because, during times like this, prices going down, and you have so much retail, so many retail traders just focused on that. Meanwhile, it's like the downward action doesn't even exist in the halls and the upper floors of BlackRock, where they're just putting out articles about, tokenizing and upgrading infrastructure. And it's like they couldn't care less about the price action to the downside today. They're not paying attention at all, it seems like, right? They're just head down focused on, implementing this technology. And I'll give you this too. At the Ripple Swell conference, they had Patrick Witt, who is part of Trump's crypto, council. And he actually was on stage, and he predicted that the crypto space was going to a $10 trillion market cap. And so, to anybody who's feeling down right now, I just remind you that you have BlackRock and other big players. Vanguard's going to offer the ETFs. BlackRock's talking about tokenization of all the markets. And then you have people working directly with the president talking about us heading to 10 trillion as an asset class. So when you take a step out, if you have to step outside, get away from the computer screen and the 5 minute chart and zoom out a little bit and see what's happening here. I mean, like you said, this is lining up where major altcoins that are getting ETFs, digital asset treasury companies are putting it on their balance sheet. You're getting real institutional adoption and institutional inflows through the ETFs. These assets have new highs on the way. And I agree with you on that statement. What's your take on how soon till we hit that $10 trillion market cap as a total asset class?
Well, I don't think we're going to hit it in 2026. I think that might be the cycle that comes
Next
later.
cycle. Yeah.
Because if we hit it in 2026, we need to be realistically seeing Bitcoin, which is still the majority of the market share of cryptocurrency, that has to be at hundreds of thousands of dollars per coin. We're going to have to see Ethereum at what, 20,000 plus, Solana at probably 1,000 plus, XRP at least 20, 30, $40 or above. Now, I would like this all to happen, just to be clear.
I'm going to
If it
clip
happens
up that
tomorrow,
part, Jake. I'm going to just get that 10 seconds there and we're going to run with that.
direct financial advice. Yeah. Look, I do think that we will hit a $10 trillion market cap for cryptocurrency. And I do believe that we have the the future of which we get from where we are now to where we want to be. I can see that road. Like I can see that regulators are doing the things to embrace that slowly, but they are doing it. I can see that fiscal policy around the world is looking to encourage liquidity and looking to get more cash into people's pockets. Whether that's going to work for the generation after us is another question. But in terms of short-term ability to increase the price of stocks and increase the price of assets and cryptocurrency, it could be optimistic for us. I don't think we're going to get a $10 trillion market cap in 2026, but I do think over the next 3 to 5 years, it is realistically possible. And I do think we will hit a new all-time high in market cap over the next 6 months.
Yeah, yeah. That's right where I'm at too, and that's why I'm not leaving this at all. My positions have just grown. Obviously, keeping some cash around just to stay liquid and be able to sleep peacefully at night. But still acquiring these assets with strong fundamentals, good utility, and positioning ourselves in front of the next, phase of quantitative easing. Obviously, today is the day quantitative tightening ends from our Federal Reserve. So, they're gonna flip the liquidity switch here soon, and we're gonna be positioned for that. Now, Jake, really appreciate the breakdown. Anything new on your guys' end as far as Caleb and Brown, the services that you're offering? Once again, we really love it. I've gotten nothing but great feedback from the community. But is there anything new that you can share with us besides Ripple conversations are taking place?
Yeah, well, look, the most exciting thing is that we are looking to integrate with a lot of institutional platforms that can tighten things up in terms of settlement, in terms of banking rails, in terms of trade execution. And one of those, key partner offerings is through Ripple's products, which is very exciting. We're going to be doing a lot more in the US over the course of 2026. We're looking to do a lot of big events as well that we can host and just get people together where you can actually we're a company that wants to meet the people that we work with, and I've had the privilege of meeting thousands and thousands of clients over the years and people like yourself, Zach. So we want to do more of that. We're open to feedback on what products people want, whether it's ways that they can generate yield, more institutional-esque products with complex yield earnings. But for us, we really value longevity and just simplicity. We want to sleep well at night, customer assets are safe, there's no withdrawal fees. If you've got a problem or something's happening, we'll just give you a phone call. We're always going to keep that foundational structure, but we are looking to tighten things up and add more products into that. So if anyone has any feedback on things that they really want, we ultimately build what clients want. So please let us know.
Yeah, and I'd like to mention too, because I see folks get confused about this too. You're only charged the trading fee when you actually trade between assets. So if you deposit XRP in and then you decide to then just pull it out, you're not going to be charged anything, right? So can you just speak to when folks actually pay the trading fees versus all the other services that you provide at free to no cost?
Yeah, yeah. We never want to charge for custody. We never want to charge for withdrawing or depositing coins. The rationality behind that is if we were to charge for it, then it would potentially discourage people from using it. And then we have a lot of clients who it might be their first time getting into cryptocurrency. The last thing we want is someone to purchase through us and think that they're in a massive rush to withdraw to a paper wallet or a cold wallet or a hot wallet or an exchange account. We don't want them to be rushing to do that. Of course, they're allowed to do that and we'll help them do that.
Right.
But we don't want it to be a decision where, in order to not pay this custody fee, I need to withdraw these assets ASAP. We want to say to the customer, hey, this is what we offer. It's not costing you anything. So you're not paying for it. So you're not losing anything really. You can see on chain what's happening with the coins. So you can see, hey, I deposited this XRP to this vault and my broker said that this is unique to my account. All right, go on the XRP Explorer, copy and paste the address, and you'll see, oh, wow, this address is only used by me and my coins are sitting right there. So the thing with cryptocurrency is you have to back up what you say because it's all on chain, right? And then if the client wants to withdraw those coins, we're just going to make sure it's you. We're going to go through a process. It might be a little bit annoying because we're probably going to want to give you a phone call, extra 2FA and the like. But at the end of the day, we see so many scams in this space. We see so many people hitting the wrong links and putting things on their computer, getting conned and socially engineered online. So yeah, I'd say one of our downsides is we're a bit of a stickler when it comes to the withdrawal process, but it comes from a good place.
Well, I mean, every time I've, sent you a message, I get a response in minutes, literally every single time. And sometimes you're out of the office, but you have someone that fills in. For those of you guys who don't know, Jake is my personal broker. He has been this entire time that I've been using Caleb and Brown. And I can't speak highly enough. I mean, this is the service that everybody deserves when investing in cryptocurrency. And it's a level of service that's typically only for institutional clients. Like you just don't get this anywhere else. And I'm speaking, firsthand from my experience and from the feedback of thousands of people within our community that have parked a lot of assets and done a lot of trading with you guys. And, it just makes me feel comfortable knowing that I can have my assets in institutional grade custody. And when it is, coming time to trade, I know what the fee's going to be. I've been trading recently on some other platforms and I'm shocked at how much they're hitting me with spread and slippage and then withdraw fees and withdraw limits. And, you think you're going to cash out $1 million and the next thing you know, you've paid, 4 to 6% in spread and fees. And then you might pay another few percent just in withdrawing. And every time you've responded in minutes, and every time I've actually withdrawn dollars to my bank account, it's landed in the account the very next day, every single time. And so, personally, I just want to say thanks, Jake. You've done well for me. I know many others. And then can you just speak? I know you have been onboarding a lot of new people here. So how are you guys keeping up with demand? I know you guys have hired quite a few brokers recently.
Yeah, we hire staff. We always want to keep a tight community in our office. So we're obviously very picky with who we hire. We do need to hire more people in such periods of time because the amount of clients that are wanting to get new people wanting to get into crypto or existing people with crypto who just want to add us on as a tool in their arsenal, as we kind of say it, whereby they can use our services if and when they want, right? It is difficult, and there's no lie that our team are very busy. The good thing is we have processes behind the scenes that allow us to manage this, and they allow us to prioritize the work that has to be done. The reality is that in such volatile periods, our priority is the customers that we, of course, have. And thus the time it might take to onboard a new customer, instead of it being, 20, 30 minutes, it might take the entire day in the event that some documents are missing and the team has to reach out. Administrative things like that. That's just the reality of how it kind of works. You're always going to prioritize the people who you already work with, who have assets with you, over someone who might be just reaching out on our support line without actually having an account with us. I don't mean that to be discouraging or rude to anyone who's considering having an account, of course. It's more so to say that if you're considering getting an account, it's probably better to do it if XRP is what you're holding, when it's $2 to $3 than it is to do it if it just rockets to $10, for example.
Yeah.
But I'm sure everyone probably understands how that stuff works.
Well, and like you said, you need to set up all this now before it gets chaotic out there. And it's free to do so. So why wait? And this is what I say to new folks coming into the market. I send them to you guys, right? Your level of service, white glove, personalized brokerage service is unmatched. So, for new people, head on over there. But then also for folks that are trading and, have considerable holdings, right? That are moving bigger amounts of money around, you want a platform that's not going to limit you and not going to nickel and dime you, right? And so I just encourage you guys to set up that personal relationship with a broker at Caleb and Brown. Go try it out for yourself. And if you don't like it, no harm, no foul. It's free to move in, free to move out, and you'll have no issues. And I appreciate your comment, because the only thing that I've heard people say is, "Oh, I tried calling and they didn't answer." Okay, the phone lines get lit up. But like I said, every time that I send an email, I get a response back in 2 minutes tops. And so if you call the landline and you don't get an answer first try, don't give up, okay? We've been sending a lot of people over to Caleb and Brown, and so I'm sure the phone lines have been jamming up a little bit there, huh, Jake?
Yeah, I'll probably have a few missed calls to attend to after this video. At the end of the day, yeah, we can have systems whereby multiple people can chop in to make sure that emails are attended to. The reality is, if I'm on a phone call with you, it's very difficult for me to try and replicate myself to have another phone call. I would do it if I could, I really would.
Mhm.
But another thing I would say is, you touched on the idea, but there's no cost of having an account with us. Like, we're a local Australian business. We're not trying to reinvent the wheel. We're really just trying to have like an honest, integral company that can experience longevity in this new asset class. And with that in mind, if someone signs up an account and they say, "Hey, this isn't really what I'm looking for. This isn't for me. I want to do leverage trading, or your trade minimums are too high," or something like that. There's no hard feelings. Reach out any time. If you ever get yourself stuck or get yourself in trouble, reach out. We'll try and help you out. I would say a large portion of the emails I receive and the calls that I do, they're not about buying and selling crypto. They're about all the other things that happen outside of that. So, with that in mind, we do want to encourage people to have a conversation with us and try and tailor their experience with Caleb and Brown around what they're looking for. If you're looking to do some giant trade in the future, yes, talk to your broker, negotiate the fees, figure out something that works really well for you both, get your bank account tested, get your wallet tested. If you're concerned about our custody solution, for example, and you really want to use your ledger, for example, there's no hard feelings. We'll send it to your ledger. Just give us the assurance that it's actually you that's behind that email, and approve the two-factor authentication processes. And if you change your mind, want to send those coins back, well, it doesn't cost you anything. So we really like the idea of keeping it very simple and clean and just transparent.
Yeah, I think that folks need to try it out. They'll really appreciate the experience. It's unmatched compared to all the other platforms that I have tried out and currently use. And like I said, guys, I mean, I have the most amount of my XRP besides cold storage parked with Caleb and Brown. And I feel comfortable. And just knowing that when it does come time to trade, I know exactly what that fee is going to be. And I know how much dollars are going to land in my bank account. And I know that it's going to land there the very next day. I think I've had one bank holiday where it took an extra day, but that wasn't your guys' fault at all. And so, once again, thank you for the service. We really appreciate it, Jake. And thanks for coming on today, sharing us your market insights. And if folks want to get in touch with you guys, we're going to have the link down below. Go sign up with them. Let them know that I sent you. You'll be brought right to the top of the list, and these guys will take care of you. So, thanks again for coming on today, Jake.
Thanks for having me. I appreciate it. Thanks for listening, everyone.
All right. On the way out, if you guys could like this video, we'd greatly appreciate your support. The link for Caleb and Brown will be down below, and we will see you guys in the next one. Thank you so much. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.